And I appreciate you coming on, especially after what has proven to be a tough quarter, at least relative to expectations. Walk us through what you think is happening.
Yeah, obviously we got questions around continued growth as we're going into what some consider will be or already is a recession. I just want to talk about what, we put up record revenue numbers. We guided to record revenue in Q4, guided to record adjusted EBITDA in Q4. And the questions are around riders and drivers. I can say that already in October, and we talked about it on the call, we saw that we're on path for October, that we hit record all-time bookings. And then from a rides perspective, which is where there were a lot of questions, we actually saw month over month 6% growth, which was higher than what we saw in 2019. So for us, we're seeing market conditions, our marketplace conditions improve. And we're just going to have to continue to put up numbers that demonstrate that to our investors.
So do you think that the investors are misunderstanding? I mean, you're hearing these questions coming from them. It sounds to me like there's two issues. They're thinking both on the revenue side what the picture looks like, but they're also thinking about cost control on the other end.
Yeah, I mean, we're confident with the moves that we're making, and in the dynamic we're seeing on both the driver and rider side. On drivers, quarter over quarter, it was the best increase in active drivers in a year. And so, yes, we think there's some misunderstanding, but we're listening to the feedback and we're continuing to work to put up those record numbers.
How much do you think this is an issue of how people compare you now to Uber, which in many ways is actually a different business?
Yeah, I mean, that could be part of it. I think it's just a broadly, tough market environment, as we all know. We've had that comparison over the last decade. As you know, we've always worked to out-execute any narrative. And that's what we're focused on now is let's build the best business that is Lyft, that is focused on North American rideshare, which we think over the long term is the right strategy and will reflect itself in the stock.
What are you seeing in terms of what you imagine comes in 23 vis-a-vis just the way this economy is playing itself out? What are you hearing from drivers? I mean, it's funny because we keep hearing that everything, the actual business is good, but everybody's worried about next quarter.
Yeah, so what we've said on for 2024, we've put out and reiterated even greater confidence in our 2024 adjusted EBITDA $1 billion target. And we have two cases to get there, two main cases, obviously, as well as cases in between. So one is the growth case where we see continued growth on the ride side. And that has us getting, around low 20% bookings, year over year growth. And then the other case is that we do see some slowdown. But one of the big costs in our business is driver engagement. And we see more and more drivers coming organically to the platform over the last quarter. And I expect that to continue as more and more people are looking for supplemental income. And that will also help on the bottom line as well.
How do you think about pricing? I mean, that's been one of the big conversations in this post-pandemic world. The price of Lyft, the price of Uber have been materially higher than they have historically.
Yeah, actually, quarter over quarter, we saw on a per mile basis that our prices came down. And that's a reflection of the improving environment on the driver side. I think for the last 2-3 years coming out of the pandemic, we're still catching up on service levels. We've gotten the closest now that we ever were post-pandemic to those pre-pandemic levels. And so the improving driver side situation does help bring down the price in those times when there's a lot of demand like nights and weekends.